Stacy Wallace, and it is my joy tonight to introduce you to the topic of Solavei life in taxes. We are going to talk tonight about a topic that is very important to all of us who are passionate about building Solavei. You know, we have the value proposition of $49 unlimited voice, text, and data, and certainly there are a lot of people that get excited about that. But tonight we're going to talk about something beyond just the value proposition. We're going to talk about what happens when people do become thousandaires in our program and begin to make money that a lot of people have come to Solavei for. Tonight is just one of our many team development calls. This is a webinar this evening, our Thursday night national training webinar, and you can see the schedule there on the screen. Monday, Tuesday, Wednesday, Thursday. We've got something for you in order to help you develop not only personally, professionally, but also to begin socially sharing Solavei with the world that's around you. You can see those posted at empoweredliving.biz. Tonight, we want to quickly just talk to you about what is Solavei and why are we so excited about it. And I'm personally going to tell you tonight that Solavei to me is more than mobile service. It's more than just the $49 a month unlimited voice, text, and data nationwide 4G. It's more than just being able to tell people that there is that there's an opportunity along with Solavei. It's more than a social network that we are offering. It's bigger than Facebook, Google, YouTube, Twitter. In fact, if you look at the value proposition of Solavei, what we're talking about is merging multiple worlds and bringing them together. Certainly we all know how vast social media is today, and you know, consider Facebook alone. Many of us love being on Facebook, love connecting Facebook and telling people about happy birthdays and that we're having a great time at the football game. But while we're doing that, Facebook's mining our information, selling it to advertisers, and we're basically not making money while Facebook and the advertisers make a lot of money. Well, Solavei is about to change all of that. Solavei recognized that social media is a massive new form of communication, whether it's these that you see on the screen or Groupon or Pinterest or others, Instagram. People love to share, and it's been proven. Tonight you're going to hear from somebody that has become quite the, I would say, a rock star in the company, but him and his wife are ordinary people who have just cared about sharing with others. And tonight, what we're going to talk about a little bit is how Solavei is taking ordinary people like you and I, giving them an opportunity to get a piece of the pie instead of the advertisers and the companies making money. Solavei is actually taking 50 cents on every dollar of gross profits, and the goal is to put that money back into the hands of the people, giving them an opportunity to share in a social commerce model, all on your phone, where you are actually going to be notified when people join Solavei Network. When you tell people that it's great service, you know, it's not just a social network, it's not just mobile service, but it's great mobile service. Riding on the backbone of T-Mobile, we're not a reseller of T-Mobile, but we operate on the towers of T-Mobile, so we have excellent service, incredible ability to expand our network with a lot of spectrum there with T-Mobile. But equally, we're doing that by letting people be the people who share it instead of putting billions of dollars like AT&T, Sprint, Verizon, T-Mobile. Just those four operators alone combined spend $12 billion in advertising. Solavei looked at that model and said, you know, why should the big advertising companies, why should the big mobile carriers make all the money when it's the people today who really do the best sharing? I don't know about you, but I trust my friends' opinions. And maybe you have friends that you don't trust their opinions, but certainly we know the power of word of mouth and trust is massive when it comes to creating brand trust. And so by people just sharing with people the great value proposition of Solavei, Solavei is actually taking that same dollar, that advertising dollar, and shifting it back into the hands of the people. So people like you and I can look right on our phone and start to see the net just because they're it, maybe with a few people. And as revenues to grow, that's when the dollars are at what we call our full pay card. The future is not just a model to come as we can develop our network of subscribers. And as they grow, we can see into the future and know that there's going to be great offerings like cable, insurance, financial services. And the world is our oyster, really, with Solavei, because we realize the value proposition is to drive down commerce in things that we purchase every single day. You know, everyone 300 million people in America alone carry a cell phone, and around the world it's 5 billion. We have a major market of people to reach, and we're not saying, hey, we want to upsell you and have you buy more than what you need to, which a lot of direct sales companies do. They want you to buy lotions, potions, pills that you could buy less expensive at the store. What we're doing instead is we're driving the cost down, giving it to you at an incredible value, and with doing that, saying, in addition, if you'll share it with a few friends, we want to be able to compensate you for doing so. And so as you can imagine, as that network grows and maybe you have a couple hundred or a couple thousand, imagine what it would be like when Solavei flips the switch on cable and all those same people that are in your network start to buy cable, and then maybe goods and services or energy. This is where the future of faith is headed, and we're very excited about that. Tonight, I have the privilege of introducing you to someone who has really wowed me from the day that I met Jose, Miranda, and Svetlana. Svetlana is from Russia, Jose from Puerto Rico, and this couple, they were among the first people when I was looking at my list. Like many of you have gone through the Massive Action Plan. I looked at this list and I said, those are people I like, love, and trust, and I want them to be a part of my network, and contacted Jose, who is just an incredible leader in his community and reaching out to people, caring for people, very well known as somebody who is at the funerals, at the weddings. He is a carer of people. I spent many years love people. More importantly is I knew this guy didn't come with years and years of direct sales experience. He wasn't a master networker, but he was a guy that loved people, and so was Svetlana. In fact, Svetlana was probably one of the first reasons why I contacted. Svetlana is a master coupon cutter. I called her up and I said, show me how to cut coupons like you do. She came over with all these books, and I tried it for 1 month, and I realized, oh my goodness, this requires a full-time job if you're going to cut coupons like this. But what I realized is they both knew two of the most important things that Solavei offers. Number one, they understand value and why it's important for people to stop overspending on the things we buy every day. Svetlana saved hundreds and thousands of dollars for her family by clipping coupons. Now, Jose, masterful when it comes to creating great relationships and caring for people. Those two dynamics put together, since Solavei and since Jose and Svetlana started, have now put them at the number 2 position in the entire company of over 50,000 members, and it is with great honor and great joy that tonight I am able to introduce you to someone that is just a great leader around, and that is Jose Miranda. Jose, this evening?
Yes, can you hear me?
Can hear.
Svetlana is also here.
Hello. Oh, excellent. Hey, Svetlana. Hi. Before we get into the topic of the evening, Jose, I think everybody would love to know, what is Solavei to you, and why are you here? Certainly, I know you are a man and woman of humility, and then you're not one to want to take the praise, and I know you're going to give it back to your team, as you always do. But I certainly know that people want to know the secret sauce. They want to hear transparency. What are you doing that's making your network explode like it's been exploding?
Well, Stacy, thank you, and good evening, everybody. First and foremost, we glory to our Savior Jesus Christ. It's because of him that we're here, Stacy. There's nothing other than it is definitely supernatural on the hand of God working with us. We have done this, Solavei, joined arms and linked arms with you guys. We were not even thinking about turning this into a business. We simply wanted to save money on our cell phone bill. That's how we got started, paying over $200 a month, and now you introduce us to Solavei and cut our bill actually to nothing. And that was why I attracted to Solavei. Second, I love the slogan, powered by relationships. What Solavei means to us is exactly that. We are people that love people. We love to help people and see them succeed. Like you said, I'm surrounded and Svetlana by amazing people. Our team is the reason why we're here. Because of them, absolutely, I cannot take the credit for anything but to them. One of the things that I love about Solavei is that it lines up with our core values. You guys love people. Second, you care about the individual. One of the key sellers for me about Solavei was that it was not about how much money I need to bring to the table or how popular I am or what I can offer, other than you guys say, hey, we want to help you save on your bill. That was number one. Now, you asked me what is the formula for our success. Quite frankly, number one is God. Number two, we keep things simple. This company, we share it with people every day. One of the core values of our lives is to him that knows to do good and you don't do it, you don't share it with people, that's sin. You know, there's one principle, you guys, if we want to get into the logistical things, because you guys, okay, Jose, cut to the chase, what's going on? How can you grow to like almost 10,000 people right now in just a matter of 6 weeks? Well, there's some key things that we have been taught by Stacy Wallace, our coach and our mentor in this industry, which is the simple principle of sharing it with 12 people who get 12 and multiply that throughout your entity. Yeah, you can get a lot of people that just use a phone use, but find these 12 people that want to link arms with you and do this as a business and simply multiply it throughout. Svetlana and I began no landing pages. We're not gurus in technology other than, hey, we know how to use a computer. We know how to use Facebook and social media. Yes, we know all that. But we didn't have all this money to invest in these engines, which are great. But for us, we wanted to stick to the principal core value of Solavei, which is one-on-one. We follow up with people. We talk to them. One of the things that we do, be prepared. We have our business cards that we share with people. I don't leave people's presence without getting an email. Restaurants, you say, hey, how's that working for you? We keep it simple. You like your phone bill? Like, no. Hey, listen, how about I shoot you a 6-minute video and you tell me what you think? We keep it that simple. I don't go in depth with anything. Neither does Svetlana. And, you know, it works. The following up with your team is key. Following up with the people that we like, love, and trust. You know, absolutely, I don't know 90% of the thousands of people in our network, but I made up to those that are direct to us to commit, to love them, to train them, to whip them. What do? You got stones that you can throw at the giant. You might be here and you're only wanting to use a phone service. That's great. You might be here and you say, you know what, I want to get my phone service for free. Well, we have 3 goals. Number one, I show people that you can lower your phone bill, okay? Number 2, we show people that they can eliminate their phone bill. And number 3, if they so choose to, they can make money on their phone instead of them paying for their phone. We break it up into goals. What do you want to get out of Solavei? Well, we want to lower our phone bill. Okay, we'll show you how to do that. And Stacey, you can cover that based upon the bills and compensation plan. Second, you want to eliminate your phone bill? Okay, man, it's amazing to have our cell phone bill annihilated for a long time now, a couple months now. It's just amazing. And to think that we were investing $200 paying, no, not investing. I mean, that's diaper money for us and grocery money. And, it's just a blessing. And third, we show people that want it. I love about Solavei is this, that you guys do not force us to have a requirement every single month in order to get paid or rewarded. Solavei simply says thank you for referring these people, and here's your compensation. If I choose not to, it's okay. I can use the incredible phone service. But if I do, I get compensated. So, as we grow in our network, it's simple, Stacy, what you've taught us from the beginning. 12 who get 12 who get 12. Second, I became a believer of this company. It went from just knowing about it to believing in my heart, hey, this really works. When we've got our fab, when we got our 4 trios at $650 right in our pocket, it took this company from just something too good to be true to actually, wow, this is really authentic. We were grateful to sow that fab towards missions. I mean, we love giving towards mission, giving to our church. And I must add this. We have built this network without touching anyone from our congregation. We have made a commitment that we are everyday people, that anybody can do this. We want to honor God. We want to respect our platform in ministry. And we have kept that vow before God and before the ministry that we're going to talk to people that we're in relationship with, but that are not in associations per se in a local church. So I know that I've said a lot. if there's anything we can do to serve the people that are listening, we are here, for that reason. So thank you, Stacy and Larry, your husband, because without you guys, there's absolutely no way we could have done. So thanks a lot.
Well, we're very excited, and tonight we've got a topic that, first off, I wanted people to know you. Today, this week, when we called you and I said, Jose, Miranda, you guys are number 2 in the company. What I love is you had no idea. You weren't watching the leaderboards. You weren't looking for numbers. It's just for you guys, it happened because you've got an incredible tribe of people who are duplicating that same simple method of just find a few people. You might right now, you might have 3, maybe you have 150 people in your network, but you haven't found your quality 12 yet. Continue looking constantly. Every week, get a trio like Jose and these guys are just constantly sharing it with people. And I encourage you to just maintain the course. Jose, you've given us some great meat tonight to think about, and I know that we are getting ready to move into a new season for you guys, that taxes are going to be a big question. What do I do when my network is growing up close to 10,000 and now you're getting closer to, some what could be tax liabilities, and oh my goodness, what do I do? And certainly, as these numbers continue to grow, and they're not just for you, for many people that are on this call tonight, you want to make sure you do it right. So this evening, not only are we going to talk to you about how to increase your productivity, but what to do with it. And I know, Jose, one of the things that you guys, to be real honest, people do want to know, let's go with some transcripts. What are some other quote-unquote secrets to your success? And I know you're a giver. I know that you are a tither. You are a man that loves to give to things that matter most to God. And so those are maybe secret sauces that other people wouldn't think of, but I have seen it in corporations. I've seen it in personal people's lives. When you live a giving life, you will be blessed. And so tonight we want to talk about what happens when that blessing starts to increase. What do you do from a tax perspective? And we've got a very special guest on with us this evening, Mr. Charles Monroe, who since 1996 has had his practice. He's a CPA, brilliant man. I had the privilege of speaking with Charles in depth about this evening's call tonight, and truly his heart for doing good is what excites me. Now, Jose, this happened as a result of you going to see Charles, Charles, what am I going to do? How do I set this up? This is getting bigger than I ever dreamed it would. Help me. And so first, let's welcome to the webinar this evening, Mr. Charles Monroe. Are you with us, Mr. Monroe?
I love Charles. He's a great man.
Charles, are you with us? Okay, we got to find out, Jose, what happened to Charles. Maybe you can find out. I've got him gone there. Mr. Monroe, if you had muted yourself, maybe unmute yourself so that we can get you back on to the call. Now, Jose, while he is popping onto the call, tell us what happened today. You went to see Charles. The question being, oh my goodness, this is growing. What do I do when it gets like this? How do I need to set myself up? What happened for you today?
Well, absolutely. My eyes were open. My family and I, we've known Charles for many, many years. He's our personal CPA. He's been actually doing, business of this matter since 1989. And, the only thing that I knew were, some key things, but I did not know the different options that are available. And if you're not learned in what they are, you will actually pay out more money and more taxes than you should. And, from an LLC to an S Corp to a C Corp, corporations, and having an LLC as an S Corp. And my eyes were open, and I said, Charles, it would be amazing if you can pop in this call. I know that you've never heard of Solavei. You've kind of heard about it from my dad and I, but I think there are going to be a lot of people listening to this call. If you could take some time, and this guy, listen, he is a busy, successful man, and for him to say, you know what, I'll invest that time, it's just incredible. So I just can't wait to get him on the line here. Charles, are you there, or do I need to call back and see what happened?
I can see him. His phone keeps popping on and disappearing, and we just need him to put in the audio pin of Charles. If you'll put in 5774 pound, it says it has not been entered, so I guess Charles popped off and he's back on. We just need him to get that audio pin put back in there. while we get Charles back on, there's a list that I'm going to share with you guys tonight. I was going to do this at the end of the call, but I'll do it right now, Jose, while you help Charles get on. It is just some as a home-based owner, home-based business owner, there are some deductions that you really want to be aware of. Now, tonight, I think it's very important. I make some disclaimers all the way through this call. Tonight is not about giving tax advice. Tonight is not giving you advice with regards to as a public accountant. That is not at all what I am doing. What I am going to do is share with you a couple of things that you want to make sure that you do your due diligence. Every situation is different. Every person's taxes are different, where you live. All of these things create different dynamics. But there are a few things that you need to be aware of that could be potential deductions for you in your business. And I'm going to run down this list, and then I'm going to post this list in empoweredliving.biz so that you guys can have access to this and make sure that you look at it, make sure you're getting these deductions, maybe take it to your CPA. Number one, home office space dedicated to your business. Number two, office supplies, office equipment, furniture, mileage, toll, parking, $25 gift per person per year to potential business associates. Also meals, food. If you're doing business, you want to make sure you're looking at those as well. Other things like entertainment expenses that pertain to your clients. If you're decorating your business area, including but not limited to desks, chairs, pictures, things like that. There's a portion of all these things that are potential tax deductions, software, subscriptions. You can even sometimes write off percentage of janitorial expenses on home office area or utility expenses, landscaping, bookkeeping services, books, CDs, downloads, things that pertain to your personal business development, fees for electrical, plumbing, things that you have to do to prepare or maintain your work environment. If you're having to compensate your compensation to your children for participating in the business with you. Again, photographic sessions that you're using for business materials, postage for mailing items that include business materials, family health insurance, miscellaneous memberships, things like Sam's Club, Costco, Chamber of Commerce, insurance premiums, retirement contributions, Social Security, telephone charges, and again, it's different for every person, so you want to make sure you get the advice you need. But there is a lot of things as a home-based business owner that give you an incredible tax advantage, an incredible break. And so if you get involved with Solavei, and if it's for nothing other than the fact that you are creating a home-based business that gives you an opportunity to get some breaks there for your family, I really believe it's just such an incredible opportunity. So what I'm going to do now, I've got Charles that says we're connected to audio. Charles, are you with us? Jose, are you with us?
Yeah, I talked to him. He's calling again from his cell phone. I apologize because he could hear you clearly, but we couldn't hear him. So he's calling again from his cell phone.
Okay, I see him online. However, it is saying that we cannot hear him. It's got a line through his phone. So for some reason, he's connected differently than he was at the very beginning of the call when we could hear him. So I'm not sure.
Keep proceeding, and I'll text you when he's on.
Okay, excellent. Well, what we want to do tonight as we continue, and I appreciate you guys bearing with us here, we're going to continue. This is a very important webinar, and certainly we want to get a clean recording of this going forward in the future. We'll have to do some editing of all of this banter that you're hearing me talk about so that we can get you guys a clean recording that you can share with your team. One of the things that personally, I know I get a lot of questions with regards to, Stacy, what can we do? Should we be setting up LLCs? Should we have C Corps, S Corps? What's the difference? How do we know what type of business to set up? When do we set them up? How much money should we be making before we go off of it being on our Social Security number and moving it into LLC? Now, many of you know that LLCs are not available to sign up yet. I got you, Charles. You are now on. I can hear you breathing, baby.
Stacy, can you hear me?
I can. I could see you popped on. That's awesome. So what we're going to do tonight is we're going to answer some of those questions. And we are going to hopefully, again, this is not tax advice, but what we are going to do is give you some assumptive examples, and then you will want to get with the person that is your personal accountant, or you want to do your personal due diligence to get the information that you need in order to make quality decisions about your business setup. Charles, we are so glad you are here. Welcome to the webinar.
Well, thank you, Stacy, and I'm sorry we had technical problems. I'm not exactly sure what happened. What I basically wanted to talk to you guys about were the different business entities that you can run your organization through. And it's pretty important because as you make more money, you need to be in the right position to limit your tax liability. And there are basically 5 entities that we'll kind of go through. The sole proprietorship, which is most people will start out there. You don't know how much money you're going to make. You don't know how things are going to work out. So this is basically just using your Social Security number as your business entity. Then we're going to talk about a C corporation, a limited liability company, an S corporation, and then what will really end up being the best approach for most people, a limited liability corporation that's taxed as an S corp. And I'm going to use just a basic example that we're going to assume that you net $20,000 for a year in net income after all your expenses. And we're not going to talk about anybody's personal situation because everybody's personal exemptions and deductions are going to be very different. But the tax liability in each situation is much different. For a sole proprietorship, you're going to basically pay on that $20,000 federal income tax of at least $3,000. And I used Oklahoma State because I'm in Oklahoma. Oklahoma State tax of $800 and self-employment tax of 15.3%. And what self-employment tax is, if you're not familiar with it, is Social Security and Medicare for self-employed people. When you're an employee of a company pays half of that, and then they deduct half from your paycheck. But when you're self-employed, you have your own business, you got to pay both sides of that. So that $20,000, if you're a sole proprietor, you're going to basically pay at least $6,860 in total taxes. And then the other issue with that, as a sole proprietor, you have no legal liability protection. So if someone wanted to come after your personal assets, they could do that. They could sue you and come after your personal assets. So as most businesses grow, they grow away from a sole proprietorship because they want to have their assets protected. So for the sole proprietorship, you're looking at, on that $20,000, about $6,800. The second entity is a C corporation. And most small businesses aren't C corporations. Most small businesses, as we'll talk, are S corporations or LLCs. C corporation, for that same $20,000, you're going to pay $3,000. The corporation will pay $3,000 in taxes. Federal, state will pay $1,200. And then if you decide, hey, I want to take the net money that I've made in that business out, then you got to pay individual tax on top of it. So you'll pay another $3,000 federal tax and another probably around $800 state tax. So your total tax liability is $8,000, which exceeds what the sole proprietorship is. The one thing with a C corporation, you do have legal liability protection. And I'm not a lawyer, but this is just a basic concept, is if someone were to take action against you or sue you for some reason, the only assets they could actually go after are the assets that are in the C corporation. They can't go after any of your personal assets. Whereas a sole proprietor, if someone were to take action against you, they could go against all the assets that you have. So the corporate form is an advantage from a legal liability vantage point. From an actual dollar vantage point, it's not an advantage over being a sole proprietor because you're double taxed. You're taxed, the business is taxed, and you're also taxed on the money as you take it out. The third level is a limited liability company, which has really become popular now. Limited liability companies, the federal tax amount would be the same, and if you're a straight limited liability company, you're going to still pay self-employment tax on all that net income. So you'll pay in that same 15.3%, and then you'll pay your state tax. So your liability will be $6,860 in our example. But the big advantage of a limited liability company is you get legal protection. Again, you're paying less than the C Corp, and your assets are protected. The only thing that someone could actually sue you for would be the assets in the limited liability company. So it has an advantage over a C corporation, and that's why you'll see a lot of people will have limited liability companies during this time period. The entity that's really going to help you the most is an S Corp, which is called a small business corporation. And the reason it does, it gives you the ability to split your income between wages and a dividend distribution, and it also provides you that legal protection. So in our example of $20,000, we'll say 60% of it, 12,000 would be wages, and 40% would be a dividend distribution. And when you do that, you'll see that the federal income tax is $1,800, Social Security and Medicare is $1,800, state tax is $480, and then on the dividend distribution, you'd have $1,200 of federal and $320 of state. So you're only paying $5,600. Now remember, back with the C Corp, you paid $8,000, and the sole proprietor was about $6,800. So this gives you the legal protection, and you're paying less taxes. And what you have to really think about with this situation is as your income grows, these differential in the tax benefits grow at the same rate. So, that $20,000, the difference, if it's double, becomes significantly higher, and that's the thing you have to look at with the S corporation.
So, Charles, in this particular setting as well, you get the same type of protection.
You get the same type of protection as the C corporation, and from a legal liability vantage point, but you get the tax benefit of having a less tax liability. Now, let me mention one thing on the S Corp, and it'll apply to the next thing I'm going to talk about also, is with the S Corp, you have to be careful, and this is where you work with your CPA or your tax preparer. You have to have, the IRS requires that you have what's called reasonable compensation based on your income. Because, what a lot of people would want to do is say, okay, I don't have to pay Social Security and Medicare on this dividend distribution, so I want the whole $20,000 to be the dividend distribution and save Social Security and Medicare. You can't do that. You have to split the income where you have a reasonable part as your wages and then the other piece as a dividend. And a 60-40 split is a reasonable split. But like I said, a lot of people will try to take advantage of the situation, and the IRS won't have that piece of it. The best of both worlds is having a limited liability company and having a tax as an S Corp. You get the lower tax benefit, and you also get the legal protection. And again, the total is at the same $5,600 with the S Corp, but the limited liability company will give you more legal protection than with the S Corp, and that's why you'll see a lot of companies that are limited liability companies, but they choose to be taxed as S corporations. So that's the main advantage. And the next screen will show a summary of, again, the differences. The S Corp is $8,000, the sole proprietorship $6,860, the limited liability company not taxed as an S Corp, you'll see is $1,200 higher than the other two options. And again, as those numbers increase, the benefit increases. So, and look at the rates. That C Corp rate, you're basically paying 40% tax on that net income. Whereas with the LLC tax as an S Corp, you're down to 28%. So it becomes a huge advantage, and again, as the numbers increase, that advantage increases. And then you have to think about, okay, when should I set up this separate entity? And, I think there's kind of some general rule, or at least for me, it's the general rule. When you generated enough income where your cost of setting up the entity, your tax benefit exceeds the cost of setting up the entity, you want to take a look at it. If your net income is $500 a year or $600 a year, then no, you stay as a sole proprietor. But when that number gets to $5,000 or $10,000, then your cost of setting up the entity is far less than what your tax benefit is, and that's a one-time cost of setting up the entity. So you'll get that tax benefit year after year after year. That actual cost of setting it up, it depends on where you're located at. A lot of people can set it up themselves. They may need to get with the CPA to do some of the tax paperwork relative to that and can save themselves some money. Other people will go to a lawyer or to a CPA to get it done. And that's pretty much on a state-by-state basis on what the actual cost is going to be. Regardless of what entity that you set up, you definitely want to set aside money to pay your tax liability. And you're going to be required to pay that tax liability depending on the way you set up your entity. If you set it up where you're an employee of the entity and you're getting tax benefit, you're going to either have to pay taxes on a monthly or quarterly basis. And as you start out, you probably want to set aside about 25% of whatever your net to pay for your taxes, and that's assuming 20% federal, 5% state. As that number grows, then you'll get with your tax advisor, and he or she will advise you to increase the amount that you set aside to pay for taxes. But the entity really has a lot to do with how you minimize your tax liability, and that's the thing that you really want to focus on.
Well, Charles, first off, this has been incredible and very enlightening. I know a lot of people have had questions. What's the difference between all these different entities? What should I do? And certainly tonight we're not telling you what to do or giving you the advice. This is what you should do. But certainly this is just to give you the knowledge base of knowing what each of these entities are, so that you can then do your due diligence and get with your advisor and find out what's going to be best for you. Certainly today was a great example of Jose Miranda going in and going, oh my goodness, this thing is blowing up. Charles, what do I do? How do I set it up? And certainly he made the right choice to be able to go get the advice that he needed so that he can set it up once and for all and be able to watch that. I've heard many people talk about the setting aside of money, and they've talked about, well, you should set aside 15% or you should set aside 20%. And again, it really depends on you, where you live. Every situation is different. But today, Charles, when you and I were talking, I said, what would be a safe number for folks to set aside? Because certainly some people can get away with the 20%, but 25% right now, and considering it depends which tax bracket you're in. But I just don't want to see people get to Christmas and they go, oh, well, I'm just going to, I made $50 or I made $500, and I'll get to the tax part later. And they forget, and then it hits them. And I just want to make sure that people realize that when you're in business for yourself, you're not in business by yourself. Uncle Sam is always a part of the journey, and he will come after what belongs to him. The government will get what what is belonging to them. We just want to make sure that as you continue to develop your business, that you're doing it in such a way that you're using wisdom and realizing that blessing is a great thing, but it's also a great thing to have wisdom in blessing.
Well, absolutely. And let me mention one thing. If a person doesn't have a tax advisor, I would suggest that they meet with several different ones. And, tell them about the business, tell them that they want to minimize their tax liability, and, get a feel. You need to work with a person that you're comfortable with. And, get a feel for the direction that they have and suggestions that they have, and then choose the person that you want to work with after that point.
So, Charles, you may have heard some of the list that I shared earlier. There's a lot of things that people need to consider when owning their home-based business, that things that could be deductions for them. What do you suggest? And I think what I should do is send you this list. You take a look at it and see if these are things that would be good for people to be aware of. But a lot of folks don't realize there's a lot of things that you can save your receipts and save on. What do you suggest in a general term what folks should be looking out for?
Well, the bottom line is if you're using something to generate income for your business, then more than likely it's going to be deductible. And obviously, as you grow your business, if, for a prime example for the business you guys are in is your cell phone. I mean, your cell phone bills are definitely going to be deductible, or at least a portion of it towards your business. And, if you have a home office and you use that specifically for this business, then obviously portions of your real estate taxes, home mortgage, your insurance, repairs and maintenance, all those things are going to come into play as being deductible expenses toward the business. So you keep track of every expense that you use that you're actually using to generate income with. I mean, that's the bottom line.
Yeah, and I think it's also important for everyone to note that there's a few things you don't cheat. You don't cheat your wife, you don't cheat God, and you don't cheat Uncle Sam.
No,
so
you're absolutely right.
Use integrity, use wisdom, but certainly know what's available to you and make sure you make the most of it. I believe there's many folks that are listening in on this webinar, whether it's live or you're listening to the replay, that there's a potential of great increase in your future. And as you continue to build your Solavei vision and your Solavei dream, we want to make sure that you're protected all along the way. And Charles, I really appreciate you being a part of this webinar tonight, and hopefully a lot of folks are going to be able to make great decisions and get the advice that they need. I know that you were very generous to put up your email address there, and so I've got it included for folks if they want to shoot you an email or have a question that they can certainly just shoot it there to cmonroe591 at tulsacoxmail.com. And we really appreciate that as a generous offering for folks to be able to get that. And again, everyone, seek your local advisor and get the advice that you need for your area, for your taxes. And again, Charles, thank you very much for being a part of tonight's webinar.
Right. I'm very pleased to do it, and good luck as you guys build your businesses.
Excellent. Well, we appreciate that. And what I want to do tonight is just let you know that before we go, we are going to go ahead and post. Of course, this will be posted tonight. We will also have posted the listing of things that you just want to ask. Make sure if it's available to you that they're eligible for certain deductions, that you're watching out for those. Keep those receipts. Don't let those little things slip by every time. You know, go back to Svetlana Miranda, who has been so diligent in clipping coupons. Every penny counts, and if you're throwing away money and you're coming